Ed Deicke, in your view, how will the Keystone Oil Pipeline, once it's completed, affect oil prices?
Well, of course, we think they're going to go down. And to understand the different pricing, right now you have Brent crude at about 109 a barrel, West Texas Intermediate at about 101 a barrel, and that oil, which is the Western Canadian Select oil, is about 79 a barrel. So if you start to put 5 million barrels a day of oil into the marketplace at 79 a barrel, you're going to affect the oil that's in the market at 109 and 101.
So how are you advising your investors at JHS Capital? Are you telling them to short oil futures? Are you telling them to buy Canadian tar sand stocks? How should they do it?
Well, we're axe and shovel type people. We'd rather buy the infrastructure plays. Just to give you an idea on pipelines, we're looking maybe right now this year on just natural gas pipelines to spend about $18 billion this year on infrastructure. By 2022, we'll be spending $34 billion. So that's a lot of money that's going to be spent over this time. So we like the infrastructure play. The other thing, Greg, that I think is really important that we're doing at JHS is we're leveraging this as an entire economy, entire market play. Because the fact that oil is going to come down in price is going to be good for our economy, and it's going to be good for the market as well.
And because of the harsh winter, we were seeing natural gas over $6 per million BTUs. So do you like the MLPs? Because everyone is coming in here saying, if you want yield, buy some MLPs.
Well, the funny thing is about that is MLPs, I think, are an okay play. I don't think it's the best play in the world. They used to yield 8 or 9%. Now, with all that's been going on, they're yielding around 6%, 6.5%, somewhere in there. So the yield is not as high as it has been. And overall, we think yields will go higher over time because we think the economy is going to be strong, much stronger than people think, because we think the oil and gas boom here in the United States is much stronger than people realize, and it's going to really fuel our economy.
And are there any secondary plays you recommend if, for example, gas prices go down, as you suspect they will? Does that mean buy the retailers? Because the retailers have been struggling lately.
They have been struggling lately. And of course, you could argue that they just can't get outside to buy anything because they've been frozen in the Northeast. They can't even get to their car to drive to the store. But yes, select retailers I think are good. You want to look at chemical companies which benefit from lower oil prices. You want to look at shipping companies. You want to look at anybody, trucking companies, anybody that's moving anything anywhere that's dependent on oil.